I can really imagine that we will see $1 million next year with all this demand lining up, coming to this small amount of Bitcoin left. Bitcoin mining is a perfect fit for all the challenges that we are waiting here for, in Europe. Now we see the Swiss Parliament introducing a bill for a strategic Bitcoin reserve.
OTC desks, they can track the volume that they have from China, and it has been tripling since 2021.
Bitcoin is only going up, not just in price, but also in adoption, in businesses that are evolving, in jobs that are being created. So I think there will be a lot of chances to get a foot into this industry. It would be good if we can onboard as much people as possible before all the Bitcoin go into big institutions.
It's really interesting to talk about Bitcoin mining, energy, and especially in Europe. I think currently the most mining is going on in America, if I'm not mistaken, ever since China exited it. How would you say is the current landscape of Bitcoin mining? Maybe with a little bit of focus of Europe, but also like in general, how would you describe it right now?
Yeah, so I think everybody just remembers in 2021, or at least everybody who's in the space for a couple of years, we remembers the Bitcoin mining ban in China in 2021. So if you look at the hash rate chart, on the global hash rate chart, you can see this downtrend during these months. And since then, I have to say that the mining landscape has pretty changed. You already mentioned, Robin, that US is supposed to be the biggest miners. Of course, we can't say for sure where all the hash rate is coming from. But as data show right now, and also regulational wise, we think that US is definitely the biggest miner with approximately 20 up to 40% of the hash rate coming out of the US. Especially Texas or West Texas is a mining hub. This has to do with the fact that ERCOT, the local grid operator in Texas, has embraced Bitcoin mining and is using Bitcoin mining as a tool for demand response, which basically means if a lot of energy is in the grid, miners can scale on their operations, and if too less energy is available in the grid, miners shut off their operations and get paid for it. Now with Donald Trump as elected designated president, we see that miners are getting more bullish on in the US, but we also see a lot of different countries evolving in the Bitcoin mining industry. I think everybody that has been researching mining a little bit has heard about Ethiopia. Ethiopia has a big dam right now where they produce a lot of overcapacities. So a lot of our customers at TeraHash are actually considering investing into Ethiopia. My personal opinion about Ethiopia is a little bit, I would say, it's a two-sided medal, so saying, because you have infrastructural problems there. I mean, basically what you need as a miner is internet and electricity, right? And we all know that. But I mean, don't get me wrong, the electricity is there in Ethiopia, but the infrastructure, so the flow of the electricity is not that easy there. These are infrastructural problems like, outages, maybe internet is not working. So I personally consider it still a not perfect mining environment, but it's evolving as electricity is also pretty cheap. We had Paraguay before in South America, which is basically or was a mining hub and is still kind of a mining hub. But what happened is basically that the local grid operator increased electricity prices about 15%, which made the mining business already not profitable for many operations. So they all moved over to Ethiopia. Some went to Brazil. I heard that Argentina is evolving as well right now. They just recently opened up their doors for AI data centers and, of course, as well for Bitcoin under Milei. And now, of course, Europe. Europe is a special case for mining, as normally the mining industry always worked like, just plug in your miner into the wall plug and start mining if you got cheap electricity, right? But here in Europe, we have other circumstances. Our electricity is known to be higher. So me personally, and I'm sitting next to Munich right now, just for the audiences to know that. And I pay between 30 and 40 euro cents per kilowatt hour. I don't know. What about you in Austria and next to Vienna? I think it's almost the same, right? Maybe 25 to 35 cents per kilowatt hour, which makes mining highly unprofitable. You can't set up a mining operation with these costs. And so we have to come up with other solutions here, right? And you probably have seen that we have these integrated, or we are promoting these integrated mining solutions, where we basically are not solely mining with the miners, but also reusing the heat that are produced by the Bitcoin miners. And if possible, we are also participating in demand response programs, like I mentioned before in Texas, where we get paid for shutting down our operations. And this whole concept is pretty new. What do I mean by that? I mean a time horizon of 3 to 4 years, probably, when all the narratives came up. And now we are pretty happy that we see first facilities evolving here in Germany, where our focus lies, of course, but also in other European countries. For instance, we just launched our newest project in Finland, our Genesis site, where we are now heating a whole city with the waste heat of our Bitcoin mining operation. And there we are working with the local district heating company to do that. And yeah, to just give a quick outlook on the future of Bitcoin mining in Europe, I think there is no other way than integrating it into our grids, into our energy infrastructure, into the existing energy infrastructure. But I think Bitcoin mining is a perfect fit for all the challenges that we are waiting here for, in Europe. And I can personally imagine that, the Europeans, the Germans, the engineers, that they find pretty good use cases for Bitcoin mining, as we are providing flexibility, right? This is basically our service. We are providing flexibility and switching on and switching off our miners. And I think there will be a lot of demand for that in the future. So I'm personally really bullish on Europe. I consider it the safest environment for mining, regulational wise, infrastructural wise. The point is, now many watchers or viewers probably will say, oh, wow, how can somebody say that Europe is going to be the best place for mining? Yes, I agree. We had this kind of green and left politics before in the EU Parliament, but all of this changed. In the last EU elections, we had a slight right shift in the EU elections, and they basically really don't care about, all this narrative about, oh, Bitcoin wastes too much energy. Bitcoin is money just for drug dealers and Silk Road users, and all this narratives, they are outdated. And basically they are following a more, I would say, laissez-faire approach, which basically means that we are not having any fears or doubts about, anti-Bitcoin regulation or anti-Bitcoin mining regulation. And on the meantime, we installed, or at least my colleague Rachel, where I'm streaming this podcast out of her office right now, as you maybe can see, founder of Les Femmes Orange, and also founding member of EBIA, the European Bitcoin Energy Association, which allows us basically to do work in Brussels, to be on the table with the related entities to advocate for a positive Bitcoin mining regulation in Europe.
That's interesting that you consider Europe to be safer than the US for Bitcoin mining, especially now with Trump coming into the scene and saying, oh, let's mine all the Bitcoin in America, which obviously is absurd, but it's kind of saying like we want all the energy there, we want all the Bitcoin miners there. And his speech also at Bitcoin Nashville, I think it was really good towards that. I think that's one of the small highlights of the speech where he talked about energy and where we talked about Bitcoin mining, which was really interesting to see. But we also see over the past couple of 20 years where the European Union usually is a little bit slower, but catches up to what the American does. It's almost like we just follow like a few years behind. How do you see in general that going forward with EU going a little bit more right, with the EU going a little bit more towards Bitcoin? Is that actually now changing where we maybe have a next EU president that also talks about Bitcoin? Maybe in the next EU election, Bitcoin is then already a topic where we just think like 4 years behind the US, where US has this year already the topic. EU this year it was not a real topic. I didn't find EU elections there was Bitcoin any topic at all. I feel like there was just like it's
Exactly,
it's a no topic. Is that changing? Do you see something there?
So let me first catch up with our previous point again. So basically, you're right. I mean, the US is doing pro mining regulation right now. They are doing or developing pro Bitcoin regulation right now. But I also see, when I talk about the best spot for Bitcoin mining, I just don't see only regulation. I also see infrastructure. And, there have been these pictures of, I don't know which state it basically was, of Bitcoin miners that had problems in the winter because winters got unexpected cold. And we have the same on the summers. But here in Europe, we have a pretty good grid, right? We have a pretty good infrastructure here. And I think that this can play a key role here. On the meantime, another factor why I think, and this is long term, not just right now. Right now, I agree. The US is the safe haven for Bitcoin mining, and I personally also hope it will be, because I think they have this more, I would say, liberal spirit, where you can basically develop nice business concepts, where you can do business just where you are. Here, everything is a little bit more complicated. We have to really integrate the mining, which forces us basically to use hydro-cooled machines, which is basically water cooling. And also is a little bit a different approach, right? Because CapEx, capital expenditures, so the upfront investment is a little bit higher. But you don't have so many parts that can be broken, that can break, like it's the case with air-cooled machines. So I think that miners will more and more embrace Europe, and I'm talking about 3 years, 5 years in the future. But as soon as everything gets a little bit clearer, also regulational wise, I consider personally Europe as one of the spots to be. Beside the US, I personally am also convinced about China, that they are basically mining already, and they are doing it for a long time. I have been in the Sichuan region, where I used to see all the big dams, all the energy infrastructure. I got invited to see a power plant, a hydropower plant from the inside, which I think produced around 60 megawatts or something. It's insane how much energy they have there. This is basically the center of China for energy production, where they distribute it all over China. And my guides, they just told me that they are pretty convinced that mining is still going on secretly. In certain circles, it's kind of treated like an open secret. So I think China is a good spot to mine as well for Chinese companies. Of course, they won't let US-based companies in. So I think there are a couple good spots in the future. And as soon as we get everything a little bit more clear here, as soon as we have the evidences about Europe, I think we are a really good spot to be. And your second question, politics. Of course, Bitcoin didn't play any kind of role in the EU elections back in the days. I mean, I think it was 5 or 6 months ago, right? The elections. But now with Bitcoin entering a new bull run, right? Since it touched 100K, I mean, today is all-time high day. We had a lot of these days in the last couple of weeks, right? I see more and more interest coming in from all potential sides. I see it. We are a Bitcoin only company, right? We are building energy solutions, but we are also kind of perceived as the Bitcoin company in Germany. So we get a lot of inquiries, not just about mining, but about several topics, about Lightning, about payments, about, hardware wallets. Like the people, they at least need someone to talk to. And I can definitely tell you that I observed that inquiries went up since the bull run. Now we see the Swiss Parliament at least introducing a bill for a strategic Bitcoin reserve, done by Samuel Kuhlmann, as I'm not misinformed. We also had the honor at the beginning of the year to give a workshop, or at least accompany a speech in front of the German Parliament, the Bundestag, together with other big names in the Bitcoin space in Germany. I heard that Poland is talking or discussing a potential Bitcoin strategic reserve. I think the president candidate there is saying if he gets elected, he'll introduce this kind of strategic Bitcoin reserve. On the meantime, we see in Denmark introducing a bill for realizing or unrealized capital gain taxes. I think up to 40 something percent, which is crazy. Just imagine, just by participating in Bitcoin, and we all know it's number go up forever technology. Just by participating, you are forced to pay taxes on unrealized gains. This is really like a nightmare for me as a freedom loving individual, as a Bitcoiner, and seeing how certain states are discussing these kind of taxation for Bitcoin. We had Italy introducing a bill for 42% on capital gains taxes, but I heard that they stepped back from this. They could not set it up. So I think it's still a two-sided, or you have two directions in European politics. But overall, I think what matters is the European politics, and we saw this right shift. And before we were pretty, how can I say, concerned about politics, but since then it actually plays no big role in our business anymore. I mean, there is always this risk of regulation, but now with the US coming up with big plans, and I mean, politicians may seem busy sometimes. But of course, they see what's going on financial markets. They see what's going on in Bitcoin, and they, of course, see how game theory is playing out. And I think at a certain point, that also German politicians want to participate on the upside of Bitcoin, want to at least see game theory or participate in the game theory, even if we just really famously sold 50,000 Bitcoin. But I think that this regulational train of, don't embracing the technology is getting slower and slower. Like Max Kaiser said before, he always said, we will never see a big amount of states forbidding Bitcoin because it makes no sense for them. We will see embracing them and at least maybe subsidizing them.
Absolutely. I think those taxes, there are a lot of socialist guys that just want to speak up and propose things, and we always have to wait if it actually comes into law, and we see that it usually doesn't come into law. I think unrealized capital gains is something like that. I think even Kamala Harris was discussing it or like mentioning it. I don't know if it was just like in the air or if she actually said it. I don't know. But it never comes there because obviously it's a really bad idea. Like,
yes.
you cannot tax something that hasn't been sold because the person holding that doesn't even have the money. So you basically force him to sell his assets every year. He will not do that. He will just move to another country. So that topic is on such a high level. So obviously a bad idea that I don't I don't even want to give it any airtime. But there are some really interesting points, like a lot of interesting points that you mentioned. First is like China. I think China is super interesting. I also talked with some people with OTC desks, because China doesn't officially allow those Bitcoin buys and stuff like that, but the OTC desks, they can track to a certain extent the volume that they have from China, and it has been tripling since 2021. So they report really high numbers out of China where people buy Bitcoin in China, just not so officially. And it seems to be the same story with China mining. For the people that maybe are newer to the space, Bitcoin mining in China was really big. Like, I think they owned a huge amount of miners before 2021. Then there was the big exit. And I would say there's probably still like a 10% of the network there. As we all know, we don't know the official numbers. There's no official numbers of where Bitcoin mining is. But it seems like the rough estimates points towards that, and I think that could be true. But yeah, there's no fixed number. Maybe as an interesting question, because you also deploy those projects, and you did that in Ethiopia, in Finland. What are the factors that come into play when you look at new places to mine Bitcoin? Like, what are the things that you look for? You mentioned infrastructure regulations. What are the things that you're like, okay, let's go back to do this list? And what I also thought is, isn't every place where there are huge data centers also a good place to just mine Bitcoin there? Because the data centers basically have the same kind of requirements, like we have to find cheap electricity where it's reliable, and it doesn't matter where it is, because we just need an internet connection.
So first of all, I think we both agree that the data center industry is a pretty good one right now to work in. Doesn't matter if you're in AI or Bitcoin mining. With a continuing digitalization, we need more and more computing power. And we all remember these days, like 2 years ago, when just ChatGPT came up and every second prompt just got denied because there was no computing power available to process your prompts. And this is getting better and better. And this is because companies, entities, or at least the business is increasing in this industry. And we see more and more people or businesses embracing it as well. And just to make something clear again, so I have only experience with mining in Ethiopia and South America because we run self-mining operations there. Basically, we host with other guys, right? We host with someone else who's basically doing the work there. So how the business model normally works is you pay someone to import the miners, the computers, and to set them up and to run them for you, because we have no experience in Ethiopia how to at least deploy miners. We are not willing to set up a team that is going there to take care of the maintenance and to take care of the repairs, to handle everything. So we pay a flat fee. It's like X cents per kilowatt hour that someone takes care of this for us. And we decided that we want to expand our self-mining operations all around the world in this style, as this is a crucial pillar in our revenue streams for the company. So every month, TerraHash is doing X amount of revenue via self-mining. And this is just one revenue stream. The other revenue stream is really by our model where we are basically operated by ourselves. This is the case in Finland now, where we are operating this 1 megawatt Genesis data center. And there we get basically paid from investors to run their machines. This is the second revenue stream. And the third revenue stream is, of course, consulting and setting up facilities here in Germany, helping and finding how basically interested parties like district heating companies, energy companies can implement mining in their businesses. And Sorry, what was your question again?
I originally asked of like what are the
Got it.
factors
Got
involved
it.
in like what is the best place?
Yes. So typically, I already mentioned it before. The overall criteria are internet and electricity. This is the most important. You don't need a strong internet connection. You don't need fiberglass. I always say it's enough to basically run one Starlink, and you can at least run 2 or 3 containers of miners with one Starlink. That is enough. I have seen this in Canada, in the US, where people just basically run their containers somewhere in the desert next to an old oil field and have no grid connection or no fiberglass, and they just install the Starlink. And then, it also depends, especially on your electricity rate. So, how much do you have to pay for the electricity? I would say that OPEX, so the operational expenditures, the costs per kilowatt hour makes at least 80% of your business. Or at least electricity costs make 80% of the cost of your business. And the rest is like maintenance, administration, all the stuff. But 80% of your business costs are related to energy costs. So these are playing a key factor. And I know that many people have no clue about what price per kilowatt hour is mining still profitable. Of course, it depends on the cycles between bear markets and bull markets. On bull markets, it's highly profitable. If I break it down per kilowatt hour, you can make with the newest machines something between 20 to 25 cents per kilowatt hour in the bull market. And in the beer market, you're close to 5, maybe 4 cents, depending on your equipment. So in general, we see the industry around, I would say public miners have an average around 7 cents. Smaller miners that are more flexible in moving, that don't have to satisfy shareholders, that can more or less, or that are more or less a little bit, more dynamic in adapting to new circumstances. I would say they are operating between 3.5 and 6 to 7 cents. And then, of course, you have this high risk, high return operations, which are basically too much risk for a lot of people. They get busted all the time. And what I mean with that is when you basically send your container over to Venezuela, where you have an anti-Bitcoin state, and they are seizing mining containers regularly, but you basically get electricity for 1 cent, half a cent or something. And so electricity rate is a key factor for choosing the right mining operation or mining site. And what's pretty interesting, so how we choose or how we look at the choosing of mining sites is basically how can we integrate mining there? Are there several hours where they always have excess energy? Is electricity needed 24/7? Is there maybe heat needed 24/7 that we can sell to at least lower our price? What do I mean with that is basically you pay, let's say, X amount of cents per kilowatt hour for electricity rate, and you get X amount of cents per kilowatt hour sold heat. And if you do the accounting between those both numbers, you can basically say, okay, I can lower my electricity rates maybe to a profitable range, inside a profitable range. And this is mostly the case in countries where you have a specific infrastructure that allows for that. We already talked about more dynamic electricity generation in Europe. This is because of the renewables, right? We build out a lot of solar, a lot of wind. And if the wind is blowing, we got a lot of electricity. If the sun is shining, we got a lot of electricity. If the sun is not shining, we have less electricity. So our production curve in electricity is more dynamic. So on the other side, we need a more dynamic consumer. But it also means that PPAs, which stands for Power Purchase Agreements, which is basically what we as private people have, like long-term energy contracts. Hey, you sign this contract for 5 years, you have a fixed rate for 30 cents per kilowatt hour. These are so-called PPAs. And now we are seeing more and more that companies have to join the spot markets for energy. So they have to manage their how they buy electricity, basically. And this is something which makes it obviously more complicated because the electricity market is pretty volatile. But it makes it also pretty interesting, as if you have a good trading department and you know how everything works, you can really achieve good prices, electricity prices. So yeah, on one hand, it's a challenge. On the other hand, it's a benefit. And for this, you need, of course, a proper regulational setup to doing this trading. And this is mostly the case. I mean, Finland is the perfect example. They have low taxes or transmission grid fees. They have a really liberalized energy markets where you can at least do good of this buy stuff, where you can buy electricity if you know what you're doing in a good way. And they have this open interest in exploring with Bitcoin mining. But now we also see tendencies in Germany. Unfortunately, I don't know about Austria, but I heard about some really interesting ongoing projects in Austria as well for grid stabilization, that our transmission grid fees in Germany are about to become flexible, which basically means that in peak times when a lot of electricity is in the grid, that so-called grid prioritizing assets like Bitcoin mining that you can just turn on to consume overcapacities get a better rate of transmission grid fee than other assets that are basically delivering still to the grid. On the same time, if there's not a lot of energy in the grid, transmission grid fees will spike in price. So we are getting a more, I would say, we are now coming closer to market mechanisms, a little bit away from just saying, hey, our fixed transmission grid fee is 7% or 7 cents, to a more, I would say, called free market mechanism, where it says, okay, in case that there are overcapacities, transmission grid fees will get lower, and in case that there's not a lot of energy available, taking or sucking energy out of the grid will get more expensive. So that incentives play a bigger role than just regulation.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. That's a good point. And I talked with, how's he called? I think Max from 21 Energy about that on the podcast just a few weeks, maybe a month ago, or something like that. They actually do that in Austria also with a container, and they're basically getting paid to be ready to take on electricity that is too much in the grid right now, and they are running it maybe 30 minutes, maybe 20 minutes a day, but they're getting paid on the off time, which is a great deal. It's profitable for mining Bitcoin, and it helps Austrian grid to be more stable. And I think there's some advantages that are just a no-brainer to Bitcoin mining, outside of being securing the most amazing money ever, but just the fact that you can stabilize the grid, just the fact that you can lower electricity costs in certain areas, and you can use it for heat reuse. There are amazing projects like that also. Bitcoin mining seems to be, if you really look closer, for everyone that is in the energy sector or wants to be in the energy sector, really a no-brainer. And what annoys me the most, as we talked before about politics and now about energy, that mix-up is not nice for me. It's like, those politicians that should be for green energy, that should be for how can we make the energy more renewable, how can we make all those things, they are against Bitcoin. I mean, the energy FUD of Bitcoin, I don't know, I don't hear a lot of it anymore. I think since this year, especially since BlackRock came into space, since like a lot of things came into space, it's just not a topic of discussion anymore. But there's still like it needs a little bit time to probably blow off even more. But it's super interesting how useful Bitcoin mining is outside of the thing that it actually does, like securing Bitcoin. Even outside, it's just like an amazing tool for that. So I'm just like, I'm really amazed the more and more I look into it, and I'm getting to be a Bitcoin mining fan, and maybe I have to look into 2025 a little bit more and educate myself even more in that space, because till now I just like ignored that space of Bitcoin too much.
Yeah, that's a good point. What you just said right now. I don't know. Since when are you in Bitcoin, Robin?
I'm approaching my 5th year, so like I'm now 4.5 years, I think, into Bitcoin.
So from my point of view, you're an OG. I joined the space in 21. And I grew up with this narrative of Bitcoin is using too much energy. When I talk with people at the beginning of my journey, I mean, we all know how it is. As soon as you got orange pilled, you start to talk to people and say, hey, I found the solution for everything. Bitcoin is doing this, Bitcoin is fixing that. Where I actually also lost a lot of people on Bitcoin. That's also part of the truth, understandably, right? But this narrative was always around, or it just evolved during that time. And there was a recent article or a recent graphics that showed where all of this FUD is actually coming from. And it's basically from a guy, I think he works for the European Central Bank, which is called Alex de Vries. And he was setting up all this narrative. Bitcoin is using so much energy like Sweden, or you can, all of this trash, without looking into the benefits that energy usage is actually not something bad, that you have a correlation between wealth and the ability to use energy for you as humans, right? I always point back to the point where humans managed to control fire, right? Suddenly we were able to see in the dark. We were able to cook our food, which extended our lifespan. And this was just one of the first examples how we managed to get control over energy. And it's the same like with industrialization. Suddenly we were much more productive. And I think that energy consumption in general is a good thing. It always depends from which source is this energy coming. And this has been completely out of context. So far I know, or as far as I know, something between 50 to 60% or 70%, and it's an increasing number, is coming out of renewables. The main driver behind Bitcoin's energy is hydro energy, as it's cheap, as it's 24/7 available. And we see a more and more increasing adoption of renewables like wind and solar. And it's the only industry that is basically searching its way through own incentives into this renewable sector, as this is the cheapest available energy, right? Coal gets more and more expensive as it's a finite commodity. We had this stories in Kazakhstan where you paid basically like 2 cents or something per kilowatt hour, which was out of coal, but this was just because it was subsidized by the state. In a free market, miners have the incentive to look for the cheapest energy sources, and they are tapping more and more into renewable sources where nobody else can basically use the energy. I have been into Paraguay like 1 year ago, and suddenly I just saw a data center in the middle of the jungle. And I think, and this brings me back to your question, the data center industry basically is growing, and you have to make a big difference between conventional data centers. What do I mean with that? I mean we are always the exotic ones with our Bitcoin mining container, right? We can set it up really quick. We don't have that much costs and infrastructure. We basically just need the cooling. We don't need a fiberglass internet connection. So we are more like the way quick and dirty. We can do tap into sources that are available immediately. We can send our container there and start. And we are able to interrupt our operations. This is really important. This is one of the main differences between Bitcoin mining data centers and conventional data centers like AI, Netflix, Amazon, you name it. Because you have users on the servers, right? Just imagine, Robin, after a long day of work, you're sitting on your couch, you're laying on your couch, having your drink, just wanted to watch a little bit of Netflix, or you want to stream a match. And then suddenly servers turn down and you can't see your match, right? So the costs or the opportunity costs are pretty high here for these data center operators. And basically they all get paid for providing a 100% uptime, which is not the case with us. We get paid for providing flexibility in switching on and switching off our data centers. And another big difference is, and this is just, for different investor profiles, I would say, AI data centers or conventional data centers, they have a higher, is it called tire level, which basically is how redundant does infrastructure needs to be, how safe it needs to be against outages, how important are the operations that are going on there. So they have a higher level of these, which basically leads to a much more higher capex investment. And generally speaking, we see tendencies for, you can just briefly, roughly calculate for 1 megawatt of Bitcoin mining, which is basically one container. You can calculate something between 600 up to 1 million thousand, 600,000 up to $1 million. And in the AI, it's more something like 10 times that investment. So 1 megawatt costs around 6 up to 10, maybe up to $15 million. But of course, your returns per kilowatt hour are also higher than in Bitcoin mining. Bitcoin mining is really competitive. It's cutting edge. So these are, I would say, the main differences between Bitcoin mining and conventional data centers.
It's super interesting. I never thought about that because Bitcoin miners, you don't have a reputation cost to it. Like if your Netflix movie all of a sudden is not streaming, you're hating on Netflix, you're paying for something that you could get illegal. And the
Exactly.
illegal stuff might be better than the legal stuff that you pay for. So obviously you don't want that. You pay for the convenience and the service. For Bitcoin miners, yes, of course, it's better if it has 100% uptime. But if it's 99% uptime, you only lose 1%. If a Netflix subscription is down 1%, it might be down on the wrong 1%. And it has like a 10% impact or like a 15% impact, which is a really interesting thing that I never thought about. It's also, you mentioned it before a little bit, Starlink probably is a real game changer for Bitcoin miners to have an available internet basically everywhere where you go. Like there's like if you have a clear point to the sky, you have internet. If I understood it correct, I don't have a Starlink till now, but I really want to get one. I'm in a contract with an Austrian company, and if that runs out, I'll probably get a Starlink, because then I can just take that internet with me all around the world. So that probably is a really interesting, was a good one.
It's just, one part of, or one piece of the puzzle to decentralize mining more and more. And this is also a point I wanted to make, regarding to your point, or to the topic you talked before, that you have to educate yourself a bit into Bitcoin mining. I mentioned already a couple of times that it is getting a highly specialized industry, right? So the times where people are mining on their laptops, or at least, just running one miner, for creating or for mining reasons, mostly over. And this is a personal, how can I say, it's personally really important for me that people are well educated in mining, that they understand what they're doing. And from my perspective, it's kind of misleading if you think about to invest into 2 or 3 miners and run them somewhere in a data center, overseas. Because actually, I mean, I'm now coming from a German perspective. The reason is this: as soon as you are deploying just one miner, and I'm not talking about the nerd miner from nerdminer.de, I'm talking about a real miner, right? As soon as you're deploying one miner, you actually have to run a company for that, as you're being considered as doing business. You have to run a business for this. And what business brings is the obligation to do taxes, to do all of this kind of stuff, right? And this is something where not a lot of mining providers, service providers talk about, as it's basically not a problem, right? What happens with the taxes of the customers. But I think, or at least, to do the accounting for just one miner will take fixed costs of around $1,500 a year, even if you don't have a lot of revenues there. But it's just like the normal thing. A holding also consumes like 1.5K for accounting. And this is just money you won't get in with mining, just with one machine. So it makes basically no sense to just, from an investment perspective, to just buy one machine, 2 machines, 5 machines, and let them run. I think the market will change here as well, as we see a big retail market right now. And honestly, we thought about doing this as well, because we are Bitcoiners from heart, right? And we want to do mining accessible for everyone. But it's just not profitable. And I think as Bitcoiners, we also know how important it is that at least business is running profitable. And this is why we decided for our approach, our company, our investors, that we are just dealing with institutional investors, that it is basically, kind of fun for everyone, and that nobody is at least disappointed, because as soon as you have disappointed clients, everything starts to be a little bit, not that nice. We have less clients. That's another big advantage for us. Just imagine you have to fill up one data center with 1 megawatt with 300 different clients instead of maybe 2 or 3 clients. Makes a big difference. So yeah, if you're considering maybe, I mean, I get a lot of messages on LinkedIn or via email if they can just run one machine with us. And I always tell them, think properly. I bring them my arguments, I present them my arguments, and most of them then decide against a Bitcoin mining investment. I mean, you also have a lot of upsides, right? You have a constant cash flow. You diversify a little bit. I met a lot of people that say, hey, I have a lot of Bitcoin and now I want to diversify in case the on-ramps gets closed, like, I don't know, exchange or whatever. I still have my access to my Bitcoin. So when I talk with different investors, 10 different investors means 10 different ideas or reasons why they want to invest into mining. And yeah, just this little side information for you that you should think properly. Mining is a real industry. Mining is real business. It's highly competitive, and I think you can pretty fast run into a risk of not investing. Yeah, not investing properly when you just set up with 1 or 2 miners.
Which is an interesting topic because mining is such a important thing for Bitcoin, and we need it to be as decentralized as possible. And we now have basically like 3-4 Bitcoin mining pools that have the majority of the network. Ocean is trying to do interesting stuff on that front. There is not too many hardware providers, and they are also not being as transparent as they could be. So like there are a lot of interesting discussions around that topic. I'm not an expert on that. I just see there's like there could be problems arising. Do you see any? Do you have any bad feelings around mining where you see like, oh, maybe it's not decentralized enough? Like for me, it is like there's never a 100% decentralization, and Bitcoin is by far the most decentralized of all technologies. Like those facts are just true for me. But I think we can always work towards getting more decentralized, getting more secure, getting more robust of a network, especially if we onload more and more people on the network. How do you look at Bitcoin mining from a perspective of Bitcoin network health standpoint, and mining being one of the 3 major pillars of like Bitcoin hodlers, of full node runners and stuff like that? How do you look at that?
Yeah, it's pretty interesting. I think the best way to describe it is in the words of my old friend Bob Burnett, which I met back in the days in Prague, CEO of Barefoot Mining, co-founder of Ocean Pool beside Luke Deshire, I probably mispronounced it, and Jack Dorsey. And he always said that it's really important that we have a healthy mix of, mining facilities in the ecosystem. And what he means is basically the size of the mining systems or mining facilities. Back in the days, like 1 year ago, I have been to Texas to get inside knowledge into the market. And me and my colleague, we just passed at the Rockdale facility of Riot Block Platforms, which is one public traded miner, traded at the Nasdaq, I guess. And they are now setting up their Corsicana facility, which has a total capacity of 1 gigawatt. Just for comparison, 1 gigawatt is what nuclear power plants can do. So they are basically installing or setting up their facility that is roughly consuming the energy of 1 nuclear power plant. And they are public on grid, right? So if you would now imagine that these facilities, we call them elephants, as they are pretty, strong and big, but easy to hunt, basically. And as soon as America or a state would decide to turn down electricity for these miners, what would happen then? If we only have these elephants in the ecosystem, we would see a significant drop in hash rate, right? And if we still would have 2,000 blocks to go until the difficulty adjustment, but see at least, a 50% drop in hash rate, this could take months or years until we reach the new difficulty adjustment, which could really at least harm the network. And so I can see this vector, but I think it's getting better and better. We can see a trend that a lot of so-called horses are coming up. They're mid-size, they are basically seeable, but they're not that easy to hunt. They are more flexible, right? And Bob refers to that facilities, I think something between 500 kilowatts or several hundred kilowatts, which is basically 20 to 50 miners up to, I think, something like five megawatts or something. And these are more flexible. These facilities are mostly built in containers. Many of them, especially in Canada and Texas or America, are not on grid, they are off grid. So they have no public grid connection. They are not affected by actions that are going on the grid. So they can continue producing Bitcoin, or at least continue their mining operations, even if the grid is going down. And then at last we have the rabbits, so-called rabbits, and these are practically impossible to hunt, right? You can maybe catch one or two, but you can't get all the rabbits. And these are basically single miners, right? They have one or two miners, maybe at home, heating their homes. Maybe someone is just fanatic, enthusiastic about mining, running one miner. And these are the people you can't catch. These are the miners you can't basically catch, as you don't know where's mining, who's actually running just one miner. These can be all the households around us. We wouldn't know it, right? And I think for a healthy mining ecosystem, we really need a proper mix of these different types of mining facilities. And I think this is going forward. So we are building we focused on horses, basically. 21 Energy, Maximilian, the CEO of 21 Energy you mentioned before, is selling, they are selling their heaters, right? Where they have 1, 2, 3 miners inside. So I would put them more in the category of the rabbits. Even if I know that they are working on really nice products coming up that are a little bit bigger. And we also see a healthy, I think, growth or strategies in the public traded miners, which is basically really interesting. We all know Bitcoin is all about game theory, right? And public traded miners in general have the highest costs of production, which basically means they have the highest cost of electricity. And you know also how it is as a Bitcoiner. Sometimes you start to philosophate about potential scenarios, about certain plans. And we're seeing now that big miners like Mara, or I think Riot was the recent one, are playing the MicroStrategy game. They are starting to issue senior convertible notes for a 0% interest and buying Bitcoin with that. Instead of only focusing on mining. So they are basically open up a new business field. And yeah, the game theory behind this is as well. They have shareholders and they somehow have to satisfy the shareholders, and their shareholders normally they don't care how they get satisfied. If it's really Bitcoin mining or if it's just like buying Bitcoin mining and having higher returns per share. And maybe we'll see some public traded companies, opting out their original business, operational mining, to the Michael Saylor business model. This is just a side thought from myself. I don't know if this is going to happen. It was just funny. I had this thought, or I came up with this thought, like 2 months ago, and suddenly Mara is issuing these senior convertible notes buying Bitcoin. And another big vector, and I think this is honestly like the biggest bottleneck, are the pools. You have 50% of the Bitcoin network controlled by 2 pools, roughly 50%. And these are Npool and Foundry. One is US, one is Chinese. And then you have the remaining 50% maybe divided into 6, 7, 8 pools. And the rest is basically playing no role. And the problem here is that you don't know what's going on behind the curtain. These pools are basically companies. They are not open source. So we don't really know what's going on. They have their systems like FPPS, which stands for full pay per share, which is basically one mechanism how miners get compensated. But we actually, as a miner, we can't compare different pools pretty good. Who's paying more, who's paying less, as machines are going down. Sometimes we have technical issues in providing our hash rate to the pools, whatever. And I personally see it as a bottleneck because we already had these cases where pools censored transactions. I think it was one of the big pools. I don't know if it was the Russian one via BTC, the Chinese one, Npool, or the American Foundry. But basically, they have a lot of power, right? And as right now, or as the industry is working right now, pools have the authority to give the miners, to provide the miners the template that they should look for a valid hash, right? So they provide all the transactions, they choose the transactions that the miners have to execute. And in order to prevent future problems with the decentralization and especially censor resistance of Bitcoin, I think such projects like Ocean deserve a lot of at least public attraction, or deserved public attraction, because they are fully open source. They do good stuff for miners. We get fresh Bitcoin directly from the blockchain. When we work with the normal pool, we provide our hash rate, and the pool is sending us Bitcoin that they had before. So we don't know where the Bitcoins are basically coming from. Have they been used in illegal transactions and criminals, whatever? And with Ocean, it's different. You get the Coinbase, or you get your share of the Coinbase transaction, which is basically the transaction triggered as soon as a valid block has been found. The big problem here is how do you enter a pretty big system with a pool that is new and has almost no hash rate, right? Because who is joining a pool that is doing no revenues? So this is always the problem. And I think Ocean is now running with around 4 exahashes, which is not nothing, but it's also not that big, right? We have almost 800 exahashes in the Bitcoin mining ecosystem right now. So we still have a long way to go there, but we are fully supporting this approach. We are running a first test phase with our machines. We pointed 50 petahashes to Ocean to see how everything is going. And I have to say, I like this open, transparent approach. And I think it's crucial for all, at least miners, but also Bitcoiners, to at least be aware of this potential vector, because I think there's also a lot of misunderstanding in this space, because we always argument with, if one pool is doing shit, we'll change over to another pool. But we saw this a lot of times, and actually nobody's changing their pools. So I understand the theory behind it, but in practical terms, it just looks different, and it's still a big problem. So I really hope that we'll see a lot of work going into decentralization of pools in the future, in open source pools, that we can really tackle this problem, which I see personally as one of critical problems in Bitcoin.
We need more pools and not just the ones that we jump into.
Exactly. Yeah, basically there are a lot of pools. I mean, there are really a lot of pools. You can look them up, but the problem is, how do you get to a critical mass of hash rate or users, that it's, that you're running profitable as soon as you join the pool? Because if you just find one block every 3 years, the pool is not working profitable, which basically means no miners joining the pool, right? Exactly.
Yeah, I think I just was like, so people have something to look at. For the people that don't have the visual, I just pulled up from mempool.space at the mining dashboard, the pool distribution, and there we can see Foundry USA has 32%, 33% actually. We have Endpool with 20%, and then via BTC with around 15%, and then so on and so forth. And there are a lot of like in the 25% of the whole hash rate comes from a lot of smaller pools. But like if you look at the big ones, Foundry, Endpool, and via BTC, they are like really huge, and even the biggest two alone have together, let's say, what is it? They have 53%.
Like 50, yeah.
Yeah, that like 53%. That's huge, and that's basically the problem that we are talking about. I'm always a visual guy, so I was like, let's pull up the visual for that.
Yeah, it's great. I mean, you can get all the information on mempool.space, right? For mining, Lightning, or normal Bitcoin transactions. And it helped me also a lot when I was joining this industry 2 years ago to really understand how everything works. So if somebody is really interested in mining, I think this is a side which I always bring up when we educate people or institutions about mining.
Absolutely, mempool.space, a great
Yes.
great site. I make a lot of advertisement for them, even though they don't pay me for that. But it's just a great site.
Yes, exactly. I mean, it basically supports your business as well, because you can present everything in an easy, fast, and good way, right, to your listeners or viewers.
That's very true. It would be it would be a headache if I have to do it myself.
Yes. I see.
My note and just trying to figure out the visuals and doing it on a website. They are making great things. One thing that you mentioned is the Finland thing, and I want to get it early in, but it was so interesting to get down this rabbit hole. What are you seeing there as like the positive impacts of that project, and what is that project? Because I think it's really interesting to talk on a high level, what can Bitcoin mining bring, but you have insights in some real world examples, and maybe you can give us from Finland, or maybe if there's like a better project for that, some insights. What do you see actually in the real world? What are the impacts and the positive advantages of Bitcoin mining and integrating in a project?
So basically, of course, it sensitizes people about their perception of Bitcoin, right? Because they finally see, oh, it's still getting warm here, and the heat is coming out of a data center or whatever. And how we set everything up was more like, okay, we have this problem, or at least our partner has a problem. He has to produce the heat, and for this he has to burn fossils, right? This is basically how you generate heat in today's facilities. And we just came up with the idea of selling him the heat for a good price, and running this data center on green energy. So we are also providing him with a solution for upcoming EU regulation until, I guess, 2030, where he has to decarbonize his heat production. And since we started this project, we see a increasing interest in these kind of projects. Public companies are more and more putting money into these projects, and we have a lot of potential for next year in this sector, as it's win-win-win situation for everyone, for our investors, for us, and our partner. And you probably can hear a little bit that I don't go too deep into details, as it's or as this not just depends on me but also on our partners. But I can just say that everything is open up, or is more opening up. Interest is starting to surge, and this industry gets more attractive as we have special chips in our mining facilities that can provide these heat temperatures, which other computers or data centers like AI cannot provide. So yeah, from a business point, I would say it was a first really, really good pilot project. It's not even a pilot anymore. It's really like a proof of concept, and it shows it's really working on an European level. We have the best uptime from all facilities I ever saw. So we have 100% uptime. No machines are doing any or causing any problems. Accepted that on arrivals. And now we are optimizing our investment structures. So how can we onboard investors for future projects? And this will take a bit of time. We're working on that. We will finish this setup in January. And then we are pretty ready to go to approach the new projects. I think you'll see a lot of, how can I say, not advertisement, but at least we will communicate when we search for partners, institutional partners, to get more and more foot into the door, or at least to bring Bitcoin mining or enhance the landscape in Finland. And yeah, I think this is the situation right now. Regulation-wise, we already talked about that. No big issues. We're getting everything a little bit more slim, the investing process, and then we are ready to go and approach the new projects.
Really cool. Perfect. And I have one question that I asked each and every one of my guests is, what can we learn from you besides Bitcoin?
I think it's always about, and this has a lot to do with my personal development. I'm 26 years old. Oh no, I recently turned 27. I'm 27 years old. I'm always one of the youngest players on the table when it's about Bitcoin mining, right? Might it be in China, in the US, in Canada, wherever. And I never saw myself there. I always wanted it. I tried to attract this stuff, but I never saw myself there. But at least I took here and there, I took a little bit risk, and I was a little bit lucky. And since then, I can really feel that a lot of stuff changes in my personal life as well. And I try to meet everyone and every situation with kind of an open mind, because I know that every situation has its benefits. That just depends on the point of view. And I think this is something I would love to see people more and more doing, being more open to all kind of stuff, and also realizing that they can attract things by having the right, let's say, energy around them, right?
Very, very true, yeah. And it's interesting because when I came into the space, I thought I'm like someone in the middle range, and now I actually see that I'm one of the youngest guys. You just turned 27. I just turned 26, and not just, but like in September, I turned 26. So it's interesting to see how mature the Bitcoin community already is, and it's more of a maybe even like a problem that like under 20-year-olds or under 25-year-olds don't have that financial problem yet too much. So they like, yeah, like with the little money that I have, I can gamble in some altcoins and crypto schemes. And because I don't have to be responsible. And it's only when people become responsible that they turn to assets that actually make sense, like Bitcoin. And I saw that a lot of times when I see people that are only into crypto and not into Bitcoin. They are usually younger. They are usually a little bit less responsible. Like they usually don't have family. They usually don't have things to take care of. And then they let's ape into Doge. Then it's, of course, it's easy. If you don't if you have little money to play and nothing to lose and no responsible, you don't have to put food for another person on the table or stuff like that. Maybe you don't even have to put food on your own table. So then it's easy to gamble. And that's what I kind of see in Bitcoin, where we are a little bit more the mature crowd. And we are really integrating that now in the whole financial system. And it's sometimes I feel a little off because I'm so young. But at 26, it's I'm getting there. I'm soon getting to 30 years old. My beard is growing, so I'm soon be a little bit older.
Yeah, it's interesting what you just say. And we got a lot of applications, right, every month. And most of them are, I would say, something between 20 and 30. So there's a huge potential for companies as well. As soon as they apply for or approach a Bitcoin strategy in their company, that they can attract really, how can I say, good human resources. This is what I see personally, and sometimes I'm like, oh shit, this guy is more qualified for the job than I am. So you got a lot of good people in there, but in general, you're completely right. This industry is more about people between 30 to 50, I would say. But it's going to be more and more for the younger people, but it's still just more like that if you want to set up a company, you need capital, right? And in today's time, which 20-year-old got like a 100K, 200K, 400K to set up a company, which is basically going into mining, right? This is something which is more for the older generation, I would say. But I can see a lot of pressure and a lot of interest of young people to develop skills in that sections, to at least rush into the Bitcoin industry, to work in the Bitcoin industry. Because I mean, I saw this video where you actually described a little bit how you came to that podcast, right? That we are recording right now, and you just said, "Oh yeah, it was at Nico's podcast," and you just said, yeah, I had this wish to work for Bitcoin, and then I just tried to set something up, and I was lucky as well a little bit. Maybe the algorithm just played out well for me, and you came up with this new format, right? You just do it, which is crazy. I mean, crazy. You just upload every day, right? And I can imagine you have a big backlog, but I can also imagine it consumes a lot of time. But this is actually your niche. And I think there's a lot of business potential, not just in mining, in content creation, in education. And to all people that are still desperately searching for their job in the Bitcoin mining industry, just stick to it. Don't lose your hope. I think it will come. Just give us a little bit of time advocating for young people in the space and bringing this industry ahead, that we need more people. We can see this already at our company, that we are now in the process of setting up a search for new people, because we are growing. So it's good. And yeah, just stay positive.
There's two things that I always say. I always try to make a grasp, because when you want to work in Bitcoin, you basically have two things you can go towards. The one thing is being an educator, and that being an educator can be very broad. You can actually be a teacher with Mi Primera Bitcoin. You can be a content creator. You can be a podcast host. You can be a TikToker, whatever. But you can also be a salesperson that has P2P clients with a big exchange. That's also an educator.
Yep.
He has a lot of the times the responsibility to educate people on Bitcoin and take some fear away and stuff like that. I imagine you also being an educator a lot of the times when you speak with clients. So even sales, I would consider to be an educator. And then you have the other side of it where you have the developers, no matter if that's like a Bitcoin mining site that you have to develop, or like develop code for some application or something like that, where you actually do something technical, or you try to set something up. Those are the two things that you basically can do. Of course, there are other jobs like you can be a middle manager somewhere. You can be a CFO for a company. You can be a chief security officer in a Bitcoin company. That's also really necessary. I would not directly consider it a Bitcoin job, but it's a job in Bitcoin.
Yep.
But yeah, that's where I always go towards, like if you're trying to figure out how to contribute to the Bitcoin community, try to figure out like what you actually want to do, and maybe you already do something and you contribute that. Let's keep with that example of CFO. Maybe you're a CFO of a great company and you're doing an amazing job. Maybe there's a great Bitcoin company that still needs an amazing CFO. And maybe for you as a Bitcoiner, it's more fun to work for a Bitcoin company versus then other company. I mean, in the end of the day, you're dealing with numbers, and and your
Exactly.
job probably doesn't change a lot, but it makes a difference for what you're working for. So I always encourage, if you can, go towards Bitcoin, because we're in that small 5 to 10 year window where a new thing is completely created out of just like created a new industry where previously there was nothing, and that's something really, really aspiring to do. At some point Bitcoin will be boring. At some point Bitcoin will be not as amazing of an exciting of an industry, and then there will be less educators, there will be less content creators. I probably will not talk about Bitcoin when it's boring. There will probably be some other topic then. But till then, it's a lot of fun, and you should be involved as much as possible.
Completely right. I agree. And I just recently, since the bull run started like 1 month ago, I mean, since the Trump election, right? And I really got addictive again to Bitcoin content. I mean, I'm basically, I'm a Bitcoin nerd, and I consume every evening about 2 to 3 hours of market updates, all on YouTube, um, what's going on. And someone just said, isn't it incredible? We are just witnessing these times where we see the monetization of an asset. We see an asset coming from zero, being one of the most valuable assets in the world, if not the most valuable assets in the world, which I personally believe. And has not been the case for me. This has not been the case for my mom. This has not been this has not been the case for my grandmother. Assets have been there for a long, long time. Stocks, gold, silver. And now we are really witnessing how money flows into this asset and how it's growing. And this is really something unique. And it's the same with this industry. We see this completely new industry evolving. And I think there's a lot of space for this industry. And we're like with Bitcoin in the 97 or something, which I personally believe we are now more in maybe 2001, 2002. Um, yeah, during the internet or the beginnings of the internet, there has always been that one guy in a company that has to sit on a table, put a modem there, and doing some experiments and trying to get to the internet for the company, right? And I think we will see more and more people in companies, at least pushing their company for a Bitcoin strategy, and also see human resources hiring people that someone at least can take of this care of this Bitcoin strategy, as you need someone who's absolutely dedicated to it. Um, and yeah, I think this will come. It's just a natural way how things go in the ecosystem of Bitcoin. And that's basically the beauty of it, because to its, easiness, how it's set up. I mean, not just on a technical basis, but I mean, the whole concept of Bitcoin is pretty easy. And it's, how can I say, once you're understood, it never changes, right? And this lets us kind of assume or predict where things are going. And I think we both are pretty convinced that Bitcoin is only going up, not just in price, but also in adoption, in businesses that are evolving, in jobs that are being created. So I think there will be a lot of chances to get a foot into this industry.
Absolutely. And I fully agree with that. Thank you so much, Fabian, for being on. Before I let you go, we have the end routine still. So before I let you go, two things. The end routine where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the question from the previous guest is, a billion people flow into Bitcoin tomorrow. What happens over the next couple of years? He basically wanted to go in the thoughts towards what happens in a situation when a lot of freaking people all of a sudden try to join the Bitcoin network. What will that do for the Bitcoin network and the Bitcoin industry over the next 2-3 years? When we have like
So
a
first of
mass.
all, yeah. So first of all, I consider it personally pretty important that we get as much as possible individual persons into Bitcoin before it got sucked up by all the big institutions. From a capital perspective, I think it's almost like 1 billion people would join tomorrow already. So of course, the first thing we are going to see is the price. Price will spike immediately. It is spiking right now, and I think it will go over 120K end of the year. And when people ask me about the price for next year, I mean, just like normal friends, I tell them, you probably think I'm stupid, but I can really imagine that we will see $1 million next year, with all this demand lining up, coming to this really, really pretty small amount of Bitcoin left, something around 1 million, right? And I think it would be good if we can onboard as much people as possible before all the Bitcoin goes going to the big institutions. What else would happen? I think this will have a spillover effect, because we all know that as soon as Bitcoiners get excited with Bitcoin, that they are starting to talk about Bitcoin all day long. So other people will get orange pilled. So this would cause a never-ending wave of Bitcoiners to occur. And lastly, I think it would give Bitcoin a legitimization, right? Because many people want it, many people are holding it. It would, from a mining perspective, for my businesses, would be probably pretty good, because transaction fees would surge as all people are trying to get their Bitcoin into self custody. So yeah, I answer this question now more from a technical point of view than a philosophical point of view. I hope that's all right.
Yeah, absolutely. I think there's so much happening. I think, first of all, I don't think that's happening. I mean, it will happen that a billion people flow into Bitcoin, but at a stage where there has been already a few billion people in Bitcoin, where it's not like, now, let's say the number is 150 million people or 200 million people are in Bitcoin, depending on what metrics you're looking at. We will not be tomorrow at 1 billion people and 150 million. So I think it's very unrealistic that we get there. But if that actually happens, I think the fee will rise massively, the price will rise massively, all the industries, all the views on all the videos, like everything will just spike immediately. Would be super interesting. And something like that happens, I'd probably just open up a 48-hour live stream.
Yes, exactly.
Just like document everything that's happening and don't sleep for a few
best
days
because of your life.
because I cannot sleep anymore. It happens sometimes. This day I also slept really badly because I was too excited for Bitcoin. But yeah, it would be a massive event. Thank you so much, Fabian, for being on. Before I let you go, where can people find you, ask you questions, and read more about you?
So I had my Twitter before, but actually it turned out that we are more in the conventional space. So I would ask you to hit me up on LinkedIn, Fabian Weber. I think as soon as you're already connected with some Bitcoiners on LinkedIn, you will find me pretty fast. You can find our company on terrahash.space in the internet. We have a German internet page, web page. We have an English web page where we define or at least give explanations about everything we do, what our plans are. And at least you can also find me on a lot of conferences. I don't know where most of your audience is from, Robin. I
They
would
are
guess
mostly from the US, but I mean I didn't show it for a long time. But yeah, America is the number one. UK, Canada, it's English speaking. So
okay.
wherever the most English speaking people are is my podcast also.
Hi, Gert. Nice to
Hi.
meet you.
Hi, good eye.
Yeah,
Yes, there we are.
There we are. It happens sometimes because I have a podcast with Gerd in half an hour, and I'm still not done with Fabian.
Sometimes it's like that, right? Nice to meet you, Gert.
No,
You
no
can
Nice to
just
worries.
meet
join the
you.
conversation.
No worries. We're already wrapping up. It happened one time before,
Yeah.
but I'm wondering why it's not happening more often. Actually, because I have sometimes really like a podcast is ending and like 5 minutes later I'm on there. But yeah, with Gerd, I hope I have still a half an hour time. I hope I'm not late.
It is what it is. So,
Yeah.
long story short, just hit me up on LinkedIn. Just see our webpage, or let's connect on a conference. In March, there's the big mining disrupt conference in Miami. In Florida, I'll be there. So let's connect. I'm excited to answer all the questions, follow-ups, or whatever.
Thank you so much, Fabian, for being on. Also, thank you so much for everyone that's watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. And you already see the guest for tomorrow. Somewhere probably in the screen. He will come on. I should do this all the time. Then people can see the next guest and like,
Yeah,
oh,
that's
like,
good.
who is he? Like, let's him have on. But yeah, thank you so much. Bye bye.
Thanks for having me. Bye.